morning. I'm Ellen McSherry, Chief Operating Officer at the NJCPA. Welcome to IssuesWatch with Ralph Thomas. Ralph, who's seated to my far left, is the CEO and Executive Director of the NJCPA. Ralph's guest for today's show is Walter Brasch, who's seated to my immediate left. Walter is Partner and Chief Business Development Officer at PKF O'Connor Davies and is the 2016-2017 President of the NJCPA. Welcome, Walter.
Good morning, Ellen. Good morning, Ralph.
Good morning.
Great to be here.
So first couple of housekeeping comments before we get started. If you have any questions at all during the broadcast, we invite you to submit them via the questions tab, or you can tweet them to us at #IssuesWatch, so we can address them as we go throughout the broadcast. So typically, you know, if you're a past watcher of IssuesWatch, we usually start with some national issues, talk about the profession, and end with Jersey issues. With so much going on with Jersey, we flipped it this time. We're going to start with New Jersey issues, really focusing on what's going on, in particular today down in Trenton. We'll talk about the state of the profession, in particular the joint venture the AICPA just undertook with CIMA, and we'll close with national issues. So to kick us off today, Ralph, you've been spending an incredible amount of time in Trenton. You have your pulse as to what's going on, and I'm sure they can't wait to hear.
Well, I don't know if I have my pulse because I don't know if the folks down in Trenton have their pulse, given the recent events that have taken place over the last couple of days. But the one thing that I wanted to alert our viewers to is the fact that the NJCPA is elevating its advocacy efforts. And this is as a result of a recent survey with our members who indicated that they wanted to see us more out front on issues and things that impact the business climate or New Jersey's economy. So stay tuned. We'll be reaching out to our members to get their opinion on issues and asking, more importantly, for your help. Grassroots efforts are really important when we're dealing with issues that not only affect the profession, but also issues that affect New Jersey. Our legislators need to hear from the citizens of New Jersey as to what their take is on various matters that are being considered in Trenton. So, again, we're going to be out there, out front on issues. It's a little different take that we've had in the past, where we've been a little more reactive and more focused on licensing and practice issues. But because the economy here in New Jersey is where it is, we need to bring our talents to the table so that lawmakers can understand from our members who touch every aspect of the economy and citizens here in New Jersey, what they're feeling out there. So that's it. One of the things that the society has done is become a member or join Opportunity New Jersey. It's a 501c4 social welfare organization that is geared up to talk about the issues and processes that are in New Jersey. And so it's a group of 40-plus business organizations, trade associations, and educational institutions. It covers the spectrum of groups here in New Jersey. And it is there to advocate for policies that will create jobs and improve the New Jersey business climate. Right now, the organization is focused on three key issues that I'm sure many of you have heard about. The minimum wage increase to $15, mandatory paid sick leave, and the constitutional amendment regarding the pension obligation payments. These are three critical issues that we need to really weigh in on and get our opinions, get the opinions of our members and to lawmakers so that they can make the right decision. One of the other big issues up is the transportation fund, trust fund. If this goes through and gets passed, I would recommend that everybody get out, get your gas today before the prices change at midnight tonight. And if you get out early because the lines are going to be long.
So are you serious that they're going to change tonight?
Well, I think it's going to change at midnight. I believe it is. So get there early so you won't have to stay in line, because the last thing you want to be is outside not having at the pump at 12:01. But let's talk. The Transportation Trust Fund is something that has been a big conversation piece here in New Jersey. It has been over 25 years since there has been a price increase or change in the pricing for the Transportation Trust Fund. And as many of you have heard, the fund is it will, July 1, if nothing is done, technically be bankrupt. And by that we mean the monies that come in will be just enough to pay the debt service on the bonds that are in the fund. So that would indicate that projects such as repairing potholes or damage to bridges and things of that nature would not get done unless money is transferred from the general fund. So the proposal that is up on the table is for a 23-cent increase in the sales tax on gasoline. And as I said, it's not something that's not been done for a while. And this particular solution should be taking us for about the next 8 years, maybe 8 to 10 years, depending. One of the critical things out of it is that 30 to 40% of the burden of the sales tax on gas is borne by non-New Jerseyans, those individuals that travel up the Garden State or the New Jersey Turnpike going to the Cape or coming south to go to Ocean City, Maryland, and to other destinations south. So it's, I don't know, we're just going to have to wait and see what happens. The bill passed the Assembly, I believe, on Tuesday, late Tuesday night or early Wednesday morning. But it is the conversation, at least, or the narrative out there is that the Senate is not really happy with the deal that's been constructed. And they're not happy because previously there was a deal that was put together by Senator Oroho and Senator Paul Salo, which struck a bipartisan agreement, if you will, to replenish New Jersey's Transportation Trust Fund, but at the same time to also establish tax reform, if you will, to eliminate the estate tax over a period of 4 years, to provide charitable contribution deductions for charitable contributions from New Jersey charities that are social welfare organizations such as soup kitchens, shelters, and the like. There are about 1,100 of those that are registered with the state. And I always get tough to always remember. The pension exclusions would be increased from, they're currently 15 and 20, 15 for single, 20 for joint filers. That would escalate to 75 and 100 over a period of time. And I think the period of time was about 3 to 4 years for that to transpire. And the cap would be 150,000 versus 100,000. And so those were, I think, issues that, got bipartisan support, which in today's environment is really tough. But Senator Oroho really went through and crunched the numbers on the implications on the Transportation Trust Fund. I think he brought to light something that most people don't understand, that if we did nothing in that regard, that the citizens of New Jersey would bear a huge burden, because there would have to be transfers, money from the general fund to the Transportation Trust Fund in order to do road repairs. By increasing it, that burden is lifted to a great extent. That money would not have to be transferred. The 23 cents would be enough to cover also the debt, plus also infrastructure costs. The key piece of this is always, and in the Transportation Trust Fund, is that the money that goes in should be dedicated and mandated for infrastructure projects. And it shouldn't be transferred or diverted or anything of that nature. And that, to really make that happen, would have to go through a constitutional amendment. So you can see we're really working on, or have a lot of things going on in Trenton. However, the latest deal that's on the table is the one that was brokered by the governor and working also with the Speaker of the Assembly, Assemblyman Prieto. And it's a plan which does a 23-cent increase on the gas tax, but it includes a reduction in the state sales tax from 7% to 6% over an 18-month period. At the end of the day, the impact on the budget would be somewhere between $1.6 billion and $1.7 billion once it gets to the full 1% increase. So I think what's causing agita on the Senate side is, how does that gap get covered? And there's agita both from the Republicans and also the Democrats in that regard. Certainly, we'll wait and see what happens today. I understand, Walter, you told me that they're going to be meeting at noon today and caucusing on that.
Driving up here this morning, I had 1015 on. The governor was on for a good 25 minutes. And I really don't know how to handicap this, Ralph, whether they're going to vote for this or not. My gut is they're not going to go for it. I think there'll be a stalemate in the Senate today. That's how I read it.
I think
based on everything I've heard and seen, I don't think they're going to go for this.
I probably agree with you based on what I've been hearing as well. That
and what I'm most disappointed about is there is no change in the estate tax.
Yes,
that
was
got dropped off the radar completely.
That was a key thing that we were working on, along with other business organizations here in New Jersey. That would be part of the deal. In fact, it was something that the governor articulated in his State of the State message, and his last comment at his budget address was that we need to do something to reform the state tax so that burden is not put on future generations. So I guess, we're disappointed, but we will still continue to advocate and fight for some tax relief with regard to the estate tax, and we'll just have to see what happens. In fact, who knows? Something may happen during this broadcast if we make it one. But needless to say, we're extremely disappointed. But on June 27th, a $34.8 billion spending plan passed the Assembly and the Senate. So I do believe that the budget will be passed or go into effect unless there's some other shake-up there. So the governor may do some modest changes with vis-a-vis the line item veto, which he's done in the past. So I think that may be the one thing that we may see happening out there. The bulk of the new spending that is going to go to senior property tax relief, education, and social service type programs. And also, as it has been in the past, a lot of the increase is going to pay benefits for government workers as well. So very, very little discretionary spending is in the current budget.
Well, that's great, Ralph. There's certainly a lot going on, and we'll keep our viewers posted as soon as we know what's going on. I know our link to our website was posted, where we're going to keep you updated as to what's happening as we get our information. So let's now turn to what's going on with the profession. So Walter, you just completed your first year on AICPA Council. You had the opportunity to hear firsthand at various council meetings the discussion around the AICPA CIMA joint venture, and then obviously putting it forth for a membership vote. Your thoughts?
Well, as most of you should know by now, AICPA members overwhelmingly approved the proposal to create a new international association. The new association will integrate the operations over a period of time between the CIMA organization and AICPA with their existing bodies. However, we will preserve AICPA. There'll be very few changes that members will see in the governance of AICPA. So it's been an exciting year. The leadership was very much behind it. All the major firms and major companies were behind this. And I really feel it's going to move us into that next millennia of our profession, as I made in my comments in our recently completed convention. And I think it's going to advance the entire profession. It's going to provide a stronger voice in advocacy, speaking with the power of over 600,000 current and future generation professionals. It's going to enable AICPA to offer members enhanced resources, both marketing, insights, networking opportunities, and get ahead of emerging issues. And I really think if you consider, it's going to really join members in public practice. We have always struggled as organizations, both State Society and AICPA, as to how to serve our members and industry better. And I think this will really provide much more collaboration on accounting issues, auditing issues, oversight issues, both in our country, U.S., Washington, PCAOB, as well as overseas, and really bring both credentials together, bring professionals in the CPA profession and management accountants together on many issues. So I really think it's going to be a very positive thing for our membership ultimately. In 2015, the AICPA commissioned an independent research to study the perception of our brand, and business decision makers and investors ranked CPAs first among financial and business professionals, and second only to physicians. So the brand is very strong, and I think the core areas of tax audit will continue to be, leading service lines for us. And there's growing demands for specialization, as all our practitioners know, such as in strategic planning, risk management, performance management. I think there's going to be a lot of competition for that, but I think we are well positioned to provide those types of services. Many firms are. There's a demand for accounting that's going up globally. 33% of business decision makers use accountants trained in other countries. So what you're going to find, and I'll quote Barry Melanson, is ultimately many of our large firms will become CPA-led firms. Many firms are adding non-CPAs, looking for other credentials. There's changes going on in our dynamics of our profession. Many boomers are retiring, although sometimes with the recent market conditions, those decisions may be getting put off with what happened this week, but I think the markets are recovering, thank goodness. And then we also have dynamics going on with the CPA exam. We have seen fewer candidates are taking and passing the exam. They're choosing alternative career paths. And as I mentioned, firms are expanding into advisory services. My firm is doing that. Many of our large regionals are doing that. And if you didn't know it already, Massachusetts and New York just approved, their members approved to allow non-CPA members, basically associate-type members. So a lot of change going on. AICPA has recently pulled together a group of CPAs to envision how technology, social, economic, and demographic factors will impact the CPA profession in the year 2025. And the necessary actions to lead change to address the evolving demands. Here's what some of those CPAs had to say that were involved in that project.
The more involved you are with understanding the shifts and trends that are impacting you as a professional as well as your profession, the more prepared you are to succeed.
Planning our profession's future is part about just getting us mentally ready that the future is full of change.
When I look across the segments that we've discussed, globalization, the economy, reputation, CPA services, I think of many of those things in terms of where will I be in 2025? How can I differentiate? What will it mean for my career?
The opportunity to step back and look at each of these things and realize that the dot runs through all of them, that you really can't separate out globalization from technology, from education.
One of the things that those of us who have been involved in the profession for many years feel is a sense of stewardship. We want to leave the profession in a better position for those who come after us than it was when we first entered the profession.
Walter, great update on what's happening on the profession. I think one thing I wanted to throw back at you, there's been some concern from members about what's going to happen to the CPA designation. Is it going to be diluted? And I just want you to articulate your views and thoughts on that.
Sure. When I attended a regional council meeting last September 2015, I went in with some reservations about the whole thing. And after that, when I heard Barry and our then AICPA chair discuss it in depth, and a lot of the council members were also in the same boat as me, very reluctant, very concerned about dilution, I came away from that and said, this is not dilution. As Barry has said, this is an and strategy. This is not an either-or strategy. Right. So I see this as strengthening us on a national scale and a global scale to bring the two basically disciplines together, public practice and management accounting together. I think it's very powerful. And I was convinced after sitting there for a good 4 or 5 hours, hearing both sides, hearing a lot of questions from council members. I really applaud the membership for voting in favor of it. I think it's the way of the future.
Yeah. The other thing that I wanted to just weigh in on is that with the approach now moving to competencies and building competencies out in the marketplace, particularly on the business and industry side, I think my hope from there is that the work product that comes out of companies will be a much better work product, such that our members who are in public practice that have to deal with that, or who are in, in the financial services area, will get a better product, and therefore, hopefully, audit quality is enhanced as a result of that. So I think those are some
I'll
of the...
also add one comment. I sat in on an accounting educators forum that you held last October, and on one of the breaks, I think it was a professor from, might have been Kane University, had said he had taken the exam on his, I guess, winter break that January, and
that's the CGMA exam.
The CGMA exam,
right?
And he didn't realize how difficult it was going to be, and he said it was not a layup. He had to go back, and he flunked the first couple parts.
Right.
So it's not a layup like many members think. It's a difficult exam, and it's coming from an accounting professor who was a CPA.
Right.
And it has many levels too.
It does.
Absolutely.
Yes.
Which is, I think, the
It
nice
does.
part about it, because once you've shown competency at one level, you then go on to pass the next exam.
Exactly.
And so, unlike the CPA exam, you can sit for all 4 parts in one sitting if you so choose, but you can't do that with the CGMA exam.
Yeah.
Right. Exactly.
He ultimately passed, but he said it was not as
it was.
easy as he thought
I
it would
talked
be,
to him as
so.
well, and he said, "Whoosh,
Yeah.
boy, I don't realize how long I've been out here
Yeah.
and whatnot."
Yeah.
But I also think that the good thing about it too is that moving to a model where competency is become improving, enhancing, as you say, skill sets.
Yeah.
And building on that, so that you don't stop, if you will, and it's just not about taking the CPE credits and whatnot. And speaking of change,
I was going to say some exams.
yeah, speaking of
Next up.
change in exams, let's talk about the CPA exam and the fact that effective April 1st, 2017, the exam will change in a number of ways. And these changes are coming about just as a result of this whole notion of competencies and skill testing skills. And the fact, too, that our profession is becoming more complex. If you look back 20 years ago, some of the things that we were doing, and now some of the rules and regulations that are out in the marketplace, derivatives and the different complex structures, there's a need to make some changes to the exam. So, as a result of the feedback from the accounting profession, a new version of the CPA exam, as I said, will launch on April 1st, 2017. And it's going to better reflect the skills successful CPAs need to have, such as critical thinking, analytical skills, communication skills, and also evaluation skills. The exam will remain as 4 sections, the 4 sections that we have traditionally known over the years. However, 2 of the sections will have an increase in time. That is, BEC and regulations will increase from an hour each, so therefore the exam will move from 14 hours to 16 hours. I'm glad I'm not having to do that. And then some of the other changes that are going to be taking place for the increased time will be a greater focus on what they call simulations, the simulations that I had. In fact, the multiple choice questions will be reduced in pretty much each section, and more test-based simulations, if you will be invoked. And that's really to test people's critical thinking skills and the other skills that I mentioned, such as communication skills, evaluation skills. Couple of other items to think about. Many people have said, well, what's happening with the 18-month window? And that's the window that the clock starts ticking once you pass your first part, that you have 18 months after that to complete the exam. That's going to stay in place. There hasn't been a change. Our educators community, educators put together a task force, and one of the comments that they rendered was that they felt that there should be an increase in that. So we will continue to have that conversation about doing that, because in today's environment, 18 months goes by very, very quickly in the marketplace. There will be some other changes that will take place in 2018, and those are more technological changes. They're going to a 23-inch HD screen, and also they're going to move to Excel, using Excel as the spreadsheet. You won't be tested on Excel scales, but they'll have an Excel spreadsheet versus the generic spreadsheet that they have there. So exciting times that are going to be coming apart. I think the biggest thing that we as an organization, as a society, want to do is recommend to candidates to take the exam right away. You have 9 months now before the changes will start. It's a great time to take it. For those individuals that have just graduated from college, I would highly recommend that you hunker down and study for the exam, get it out of the way before you start your job, because in today's environment, it's tough to try to marry work commitments and study commitments and studying for the CPA exam. For those of you that already have a couple parts passed, do try to get those other parts taken care of, because if you don't before April 1st, you will then go over to the new format in the exam. So it's very important.
Can I make a quick point, Ralph?
Sure, yeah.
You know, one of the things that I said to the members in Atlantic City just after my installation was asking members to really pay it forward and be an ambassador for this profession. This is a trend that we can turn around. This is a soft trend, not a hard trend. We need to get more information out to candidates, to people we know in the communities and the college campuses about how great this profession is. We can turn this around. I think we need to work together, and many of you out there can help us in that regard in your local communities, local colleges, get on campuses, meet with students, go to high schools. We can turn this trend around.
Yeah.
I'm convinced.
I think we have a question that's
Yeah,
come
Okay.
so I just want to, before we get too far ahead into the national issues, we do have a couple of questions on the state issues, and I want to get to those. And just a reminder, if you do have your questions, you can tweet them to us at #IssuesWatch or press the little tab to ask the question. So Ralph, since you handled, excuse me, the state issues, I'm going to give this to you. If the sales tax cut passes and creates a $1.6 billion hole in the state budget, what's the likelihood that the Democratic governor and legislature will pursue the millionaire's tax and a sales tax on professional issues?
Very good question. That's something that we have really been fighting over the last couple years as those two items have come up. That would probably be, we'll probably see some movement towards that, unless the economy improves in New Jersey, unless we get people to stay in New Jersey and also a bit more businesses coming to New Jersey. Those might be some solutions to any potential deficit or hole in the budget. So I think what we as a society and our partners and the other business alliance groups out there like the Chamber, we would be really heavily advocating that not be done, because we think that would be the type of measure that would take us to the other side and really erode the economy here in New Jersey. I mean, we already have one of the highest tax structures. We need to be doing things to work and try to round that out. So the only other option is to address would be to look to cut services and cut other line items in the budget. And certainly that's not something that I'm sure citizens want. So we really have to work hard, I think, to get legislators to take a look at what are the right things that should be done.
And the next question kind of dovetails along the same lines. How do we get our legislature, and in particular Speaker Prieto, to realize that their actions are continually forcing wealth and investment capital out of the state? Which, the millionaire's tax, it's just going to be one more layer on it.
Well, the biggest thing is that for our members to write their lawmakers, to weigh in, to send letters, make calls to the Speaker's office and to other members of the legislature to tell them that this is not what they're going to do. I think our recent survey that we've done, that we've provided to lawmakers, I think have finally resonated with them that there are people leaving the state. There is an outward migration, and so I think that's why this bipartisan deal that was put on the table really started to address some of that, because I've always said to our lawmakers that our individuals can manage risk because they know what that risk is, right, but they have a difficult time managing uncertainty. And in an environment where we're not sure where things are going to go, people are going to lean to what they know and what they know is in place and make their decisions based on that. And that could result in an increased outward migration of citizens from New Jersey.
Can I make a suggestion?
Absolutely.
I'd like to suggest to our members to go on and pull up the New Jersey Comprehensive Annual Financial Report for June of 15. If you read the MD&A, you will see how deplorable our financial situation is in the state. And that's why this package that was developed under the leadership of Orho was really the right way to go. It was a direction to create growth, try to stop the outward migration. Just Google that, Comprehensive Annual Financial Report, and read the MD&A, and you will see how the debt situation in New Jersey is really, we are so far in the hole, you're going to be shocked if members haven't read that. And I'm telling you, read it, get familiar with it, and just compare it to other states. Compare it to Pennsylvania and New York. We are in a deep, deep hole.
Again, on that question about what can we do, I want to point members back to when there was a potential surcharge on CPA license for the medical malpractice issue. Our members, in the span of about 2 days or 3 days, 2,300, 2,500 weighed in with emails, phone calls, and letters to legislators, which resulted in us being taken out of that. And I think, you know, I mentioned earlier in the broadcast about grassroots. Grassroots matter. When legislators hear from people, and particularly from people such as our members, CPAs, and folks that are in the financial realm, they do listen. They really do listen. So I think it's incumbent upon us to write our lawmakers and express your concerns about the actions that have been taken here recently.
And here we have another viewer weighing in. If pension constitutional amendment passes, wouldn't bumping up the sales tax back to 7% be the first thing done?
Probably.
Most likely.
Absolutely. You got to find a way to
find
put
the money.
somewhere. Absolutely. It would probably go up as it did when Governor Corzine was in session. It went up. That was the last time that there was a raise in the sales tax.
Well, this is one of the problems, is that we look at the short run. We look at a year-over-year budget. We're not looking at the financial condition of our state. And it's really an eye-opener when you pull it up and read what's going on.
Well, thank you. That was good discussion. I think at this point, let's move on to the national issues. And I know a lot's been going on there too, Ralph. Let's talk about what's happening with the Department of Labor.
Yeah, recently the Department of Labor came out with its view on it, where they talking about the increasing, they increased the minimum the threshold. The minimum threshold from $23,600 to $47,476 annually for employees for determining eligibility for overtime. That more than doubles what it was previously. The rule takes effect on December 1st, 2016. But I think stepping back on this is going to pose a problem for small businesses. And also for a lot of our firms, the smaller firms.
Companies,
yeah, and and other things such as where we had latitude of providing time off as compensation. You can no longer do that under these rule changes. Also, the threshold for highly compensated employees moves from $100,000 to $134,000 annually. So big changes there. We're offering a webinar on September 22nd on this matter, so hopefully viewers will join in on that webinar and get the full details that are happening. I would like to indicate that this rule change will impact about 4.2 million workers across the U.S. That are not currently eligible for overtime that will become eligible. And an additional 8.9 million salaried workers will be reclassified as non-exempt. So really massive changes out there that are going to have a lot of impact on the business community in this regard. And as I said, the webinar on September 22nd is being offered.
And that's between 12 and 1.
And that's
so it's during the lunch hour, which makes it a little bit convenient.
Okay.
And they can register on our website for that particular webinar. So Walter, I know taxes are not really your bailiwick, but
Well, I have my hand in taxes.
yeah, I think you could
My partners shudder when I say that, but
talk us through what's been going on nationally on the tax scene.
well, yeah, there's been a lot going on. As probably most of our tax practitioners know, the due dates for several federal tax forms are changing for the 2017 filing season. C Corps will generally file the 15th day of the 4th month, following the close of the Corp's year end rather than the 3rd month. and partnerships will be due on the 15th day of the third month, which are just inverse those two, following the close of the taxable year rather than the fourth month. So I think that's an effort to really ease the burden of tax reporting to some degree. It probably is better for a lot of our individual returns, which are due on April 15th or the 18th, however the tax year falls. So I think these laws generally will include a 6-month extension, as there may be some exceptions. There is a chart for all the due date changes, and visit the link that's on your screen to get those. So again, I think a lot of our tax folks probably know all about these already. So just be aware of those, that's going to be coming up for the 2017 tax filing season.
And hopefully that will probably ease some of the filing burden, one would hope.
Let's hope. I doubt it, but.
But there are several, Walter just highlighted a couple, but there are several. So you do really need to go to the link to see others that may or may not affect you. Everybody has a different circumstances.
Correct, that's right.
I think we had a question that came in regarding the CPA exam.
We did. So we can dovetail into that.
Sure.
Digress for a second?
Hit question.
Because this is an important question.
Yeah.
I think this is, if all four parts of the CPA exam are not passed by April 2017, will the credit for passing any part prior to that date be lost?
And the answer to that is no. You won't lose credit for that, but again, you're on the clock for the 18-month cycle. So depending upon when those parts were passed, if they fall outside of that 18-month cycle, then they will be lost. But anything passed prior to the April time frame will remain intact, but the clock is running on that.
Even though that exam section is changed?
Changed, yes.
Okay,
So, and again, that's the importance of you taking the other parts that you haven't passed as soon as possible, so that you won't, and particularly if they're in BEC and regulations, which is going to increase by an hour in each of those exams. So, and again, there's going to be some changes from content. Again, the focus on critical thinking skills, and also there's going to be there's an integrated approach. And by that I mean, if you're taking BEC, there may be some information regarding regulations at a very high level that will come into play. And again, all of this is to test individuals' critical thinking skills and their ability to apply rules and regulations and crossover. Yeah. So do try to take that exam before April 17th. Absolutely. If you haven't completed it.
Right. So we also know we've had a lot going on. We talked about the state issues, but we have a national presidential election also happening right now, which may or may not have an impact on everything we're doing. So Walter, I'm going to ask you to take us a little bit through what do you think is going to happen in November?
Well, let's.
You have your crystal ball? Did you bring your crystal ball?
No, I didn't. I'll leave my personal opinions to myself today. But anyway, the Society recently interviewed Mel Schwartz, a CPA and partner in Grant Thornton's Washington, D.C. office, about Hillary Clinton and Donald Trump's tax plans. So let's view an excerpt of that interview.
Let's start with Hillary.
Okay.
I think that particularly on the individual side, and in many ways on the business side as well, Hillary Clinton has not proposed anything that you would really call a drastic change in the way taxes work. She's very supportive of the idea of having incentives in the tax code for various social and other reasons, so it's not the kind of pure tax system perhaps that you would have associated with President Reagan, for instance. There are some proposals to increase taxes on the very wealthy, the very successful. On the business side, there does seem to be some support for the general idea of tax reform, of reducing the rates on businesses and expanding the ability of U.S. multinationals to compete without some of the restrictions that the tax code currently creates. But that has not really been the focus of her presentations. It's a little harder to say what candidate Trump is likely to project. He has included some very aggressive tax cuts in his proposals without giving us really any idea of what might go with them. So at this point, that's still more an informative stage than perhaps the policies that we see out of Mrs. Clinton.
Well, I hope you enjoyed that little piece done by our resident Elizabeth Quinones on staff here. It was a great opportunity for her and for us. A lot more to be happening, certainly on the national front, and once the conventions take place, well, maybe we'll get a little bit more in depth and might find a little bit more out, or we might not.
Yeah. We may be doing some IssuesWatch updates.
We could be.
as a
We could
result
be.
of that.
Maybe a third candidate.
Could be.
by then.
Yeah, don't rule that one out. So we had a question that came in on non-CPA membership. Said, you mentioned that New York amended their bylaws, and not only New York, but also Massachusetts, to create a new membership category for non-CPAs. What's the rationale for expanding a state CPA society's membership to include non-CPAs? Ralph, you want to start with that?
Well, I think, and Walter mentioned this about how the firm environment is changing, and the fact that a lot of firms, not just the big four or the next tier of 100, are moving to practices that involve the traditional audit and tax services, but also advisory services and other wealth management type services. And I think it's just as the profession evolves and changes, should we change as organizations? Should we change to allow opportunities for those individuals who have a nexus to the CPA profession to be part of an organization? And I think that's what state societies are looking at in terms of how do we provide a better environment for our members to work in. And I think New York's change, I think, relates to where the individuals have to be in the accounting and finance area. They have to work under a CPA. So I think also, too, it's never too late to try to convert someone to become a CPA. So
Right.
this might provide some opportunities for that because of, what you mentioned about the CPA brand is
Right.
still very highly regarded and has increased in its brand attraction to business leaders and investors. So I really do think that it provides us an opportunity to bring in groups that have a true nexus to the CPA profession. And I think what a lot of people may be concerned, well, will there be a shift and that we'll have more of that group? And I don't think so, because I think the way New York structured, I think they came in as non-voting members. And again, I think it's the opportunity for this collaboration with groups and disciplines that have a true nexus to the profession. So,
Well, I think it's really reflective of what's going on in our firms. As an example, we have an individual in our New Jersey office, Cranford, who was an IRS special agent. He's not a CPA, but he's got a lot of forensic experience. He deals with very high-level IRS issues. I mean, why shouldn't he be able to align with us, with our NJCPA,
that's
And the
a
other
perfect
thing,
example.
as an example?
Yeah.
And that's what's happening in firms across the state.
Yeah. And I think, we actually had a partner down at our convention approach us saying that he had people in his office who were never going to be CPAs. Some were in the IT area,
Right.
some were, just dedicated accounting-related staff, and he would like them to be able to interact more with the members, and was there an opportunity? And, there isn't right now, but maybe down the road there
And
could be.
again, I think that notion, as we talk back of what happened in with the joint venture evolution, enhancement of the joint venture, the ability to bring groups together and for them to exchange and collaborate with each other, I think at the end of the day, hopefully makes us a better profession.
Exactly.
And the exchange of ideas. And I think that's what we're looking for. It's not, some people may say, well, it's a thing of, trying to enhance or blow up membership. I think it's an opportunity to really, bring additional skill sets or the exchange,
Well,
just the
it's
conversation, the
and-
collaboration.
It's the and strategy. It's
Yeah,
not an
and
either-or
strategy, absolutely.
It's not either or.
Right.
Good point.
Exactly.
So we had another question. Walter, you said the profession can reverse the trend of fewer candidates sitting for the exam. So what are some of the reasons grads don't sit for the exam, and how can the profession reverse that?
That's an interesting question. I think it's getting out to our high schools earlier. it's getting out to colleges, it's
But I
helping.
think what this means is people, they're accounting grads.
Right.
But they're not sitting
They're
for the
not
exam.
sitting.
Yeah.
So we know the AICPA has done some research on this.
Oh, absolutely.
They
I
have.
think there are a couple of things that, and I'll throw in some anecdotal things that I think in today's environment, if I go back to when I was in school,
That's a while ago.
I know it's a while ago. I just celebrated my 40th reunion. Oh boy. All of my faculty, all of my professors were CPAs. And I think we see in today's environment a lot of the accounting staffs at colleges and universities, they're PhDs, but they're not CPAs. And in many instances, we're seeing that these individuals have not, had a recent engagement with the profession or the industry. So I think those are a couple of problems. I would think back when I took auditing. My audit instructor was the general auditor for Bethlehem Steel. I've seen situations where individuals are teaching auditing and they've never audited before.
Yeah.
So I think that's part of the issue in terms of having CPAs in that can talk about the profession and encourage students to pursue the credential is one part, I think, too, out of that. And I think, too, let's face it, there accounting talent coming out today. There are many, many, many more options for them in terms of private industry is now recruiting a lot more on campuses for entry-level opportunities. And there's not a mandate, per se, when you go into private industry to be a CPA. So I think all of those factors kind of play into that with the many opportunities that we have. So.
And as we also hear quite often that it's a time and money issue too. It's very expensive to take the exam. Some of the firms do have a reimbursement policy, which certainly helps. Many of them try to do a review course first. So it is an expensive proposition.
I do believe all the Big Four now require students or candidates to have the 150.
They do.
Before they start.
Before they start.
Before they start.
And I'd like to, we obviously, and to thank our members who support our scholarship fund. We try to do our part in that and helping to address some of the financial needs of individuals that are majoring in accounting. I think too, again, we are going to be not diverting, but reallocating some of our resources to do more on the college campus. I think we've got to have more positive conversation about the profession and what the opportunities that are there, and the fact that if you're a CPA, and this is information that we've gleaned from various research studies, that over a 40-year period, your earning potential is as much as $1 million difference than someone who is not a CPA. And I think that fact needs to be communicated. The other thing I think too, and once again, is that we don't have an accounting or business course that is an advanced placement course. I think that doesn't provide us the opportunity to attract some of the best and brightest who are going into other fields where they can take courses for advanced placement or advanced credit going into college. So students today are very smart in terms of how can they navigate the college environment to get out and get their credits early. So I think the profession is working on that. It has a course that it is geared up to with the College Board. It's just waiting for that College Board to approve it.
Okay, we have one more question, then we'll get back to the IRS here. Now that the AICPA CIMA proposal has passed, what will NJCPA do to involve CGMAs with the NJCPA and bring in more members in industry into the organization? Any plans for a CGMA interest group? Good questions.
Very good
Oh,
point.
I think there absolutely we would look to have a CGMA interest
Everything's
group.
on the table,
I think
right?
everything's on the table for us to look again with the notion that how do we enhance the skill sets of our members and provide the opportunity for collaboration on that regard. So,
Yeah, absolutely.
yeah.
Thank you. So Ralph, let's get back to IRS update.
Sure. Very quickly, earlier this month, the IRS relaunched its Get Transcript tool, which with enhanced authentication. The transcript online tool is to increase protection against identity theft. There's now a two-step authentication process for taxpayers to access their transcripts. And on the flip side, the IRS shut down its e-file PIN program after a cyber attack. And this was about a week or so ago,
yeah.
as a precautionary step to protect taxpayers. You know, there's been a lot of identity theft in the filing of tax returns. So this is another area that the IRS is trying to prevent that and slow that activity. So taxpayers can use their adjusted gross income from their prior year return to access information.
Okay, and let's wrap up with our National MAP survey.
Yes, the MAP survey is done every year. I think it's a great survey and for those individuals that do participate, they'll get information so they can track and benchmark their firms. So I really wish, I'm hoping that our members and our firms out there will participate in the MAP survey. The information is confidential. It's a great way to get a snapshot of what's happening in the profession, not only in New Jersey, but nationally and by region and by large firms, small firms. So if you're thinking about how you map up against your competitors out there, participate in the MAP survey. I think
they need to do that by July 15th.
And by July 15th, absolutely. And again, participating firms will receive a free personalized report.
Right. Ralph, is there a way, I'll have a question. I'll ask you a question. A lot of firms are in networks. Like we're in PKF and we submit information and we get PKF member firms survey data. Is there a way to merge that data with our data? That's something we can probably look at.
Yeah,
Because it's probably very similar to what they ask. The statistics
that would be
and
great.
inputs
Yeah,
on that.
we'll
So
take a look at that.
That may ease the way to participate in our survey too.
Okay.
Okay, thanks, Walter. Well, that concludes today's broadcast. Thank you for tuning in. Please join us for our next edition of Issues Watch on Friday, December 16th. In the meantime, you can check njcpa.org or NJCPA Pulse, your email newsletter, and the open forum that comes out daily for any updates on all the topics we discussed today and more. Thanks. Have a great holiday weekend.
Yeah, happy 4th of July.
Happy 4th, everybody.